Hi there, welcome to Kneppy Invest. The cricket is in a change of innings, so 10 minutes to make a video. More than likely this will take a little bit longer than 10 minutes, but I really have to do this video today because this is going to be the last September quarter inspired video, because the first company on the ASX has released the December quarter update. I'll talk about that company in tomorrow's video. A little bit of a surprise. And in fact, I've never talked about this company before, so that's a good thing. One of the whole points of me doing this channel is to generate and share ideas with you. The company I'll be looking at today is an interesting company because there is a possibility Raiz has reached a very important inflection point. This company has become operational cash flow positive on a quarterly basis. This happened in the September quarter, so be paying close attention to how they performed in the December quarter, and they've just released a December update as well. So discuss about that December update during this video. So before we look at their September quarter and that update, just a few facts in regards to Raiz. A few months ago, I was talking to someone I didn't really know a lot about. I won't call them a stranger, but I won't call them acquaintance or someone I know. And eventually the topic of conversation got into investing. I just like to know if people are thinking about investing, or if they are investing, what do they do? And this person mentioned that whenever they have a bit of spare change, they put that spare change into this app. They couldn't quite remember what the app was. I just said, is it Raiz? And they said, oh yeah, it's Raiz. So that's essentially what Raiz does. They take a spare change through an app, and they put that spare change into some ETFs, that sort of thing. Now, this person also mentioned they traded crypto, particularly Bitcoin and Ethereum, but that's a whole different topic. Anyway, the very fact that this person mentioned Raiz got me thinking about how Raiz is performing, because I haven't really looked at this company before. I actually have downloaded the app, but have not used it. So best way to think about this is, in the old days, your parents might have given you some spare change, and they'll give you this big piggy bank, and then you put your spare change in the piggy bank, and then after a few years, you might take that piggy bank to the bank and then just deposit that bank into your bank account. So this is sort of like that, but instead of putting spare change into a little piggy bank that is creating no wealth for you, no returns for you, instead of that, you're putting your spare change into an ETF, which hopefully does generate some income for you. And just mention here, Raiz constructs and optimizes 7 diverse portfolios with help from the Nobel Prize-winning economist and father of modern portfolio theory, Dr. Harry Markowitz. As I did my research in Raiz, one of the things I was really interested in is how they generate revenue, how they generate cash in their business. And this was from either a presentation they released or maybe from the website. More than likely it was from a presentation. And they describe how they do generate revenue in this one slide here. So the majority of the revenue is generated from maintenance fees. They also have account fees and advertising. And there is a difference between maintenance fees and account fees, and it's all dependent on how much money you have in the Raiz app system, or whatever you call it. If you have invested less than $15,000 with Raiz, they use the maintenance fee structure, which is a monthly subscription fee of no less than $3.50 per month. It's as high as $4.50, but no less than $3.50. So the majority of the revenue is generated through maintenance fees. So the majority of clients or customers with Raiz have less than 15% in Raiz itself. But if you increase your funds with Raiz above $15,000, they transition you from the maintenance fee structure to the account fee structure. And with the account fee structure, it's a per annum charge based off the amount you have. And that fee is 0.275% per annum. So if you have $100,000, that equates to $275. And the reason this is interesting is eventually we'll see the growth in customers slow down for Raiz. And now they are expanding overseas. I think they're expanding into, if I remember correctly, Indonesia and Malaysia. But eventually the customer base in Australia will start to slow down, but they still have to generate more and more income, and their fee structure will allow them to do that. And they're hoping that people will keep their money invested with the Raiz, and their money per customer will start to increase at a fairly good rate, particularly if the markets keep going up. So they want us to keep the money in, and if we keep our money in, that's how they generate more and more fees if the funds under management increase further and further. Hopes that makes sense. They also generate income or revenue through advertising and netting. Raiz hasn't been around for very long. It was founded in February 2016 by George Lucas. No, not that George Lucas. There is another George Lucas out there. And it only took them 2 and a bit years to go from being founded to listing on the ASX. He's listed on the 21st of June 2018. The current CEO is also the founder of the company, George Lucas. He has a 5% holding in the company. And it's interesting that the largest shareholder in Raiz, or one of the largest shareholders, is Seven West Media with 6.6% stake in the company. Current market cap of Raiz is 166 million. That's at $1.78. And the ticker code for Raiz is RZI. Now let's have a look at the financial state of Raiz, and this is looking at financial year 21 numbers. This is to the end of June 2021. So we're falling a little bit behind right now, but we are waiting for the half-year results for the company, which will be released in about a month or a month and a half's time. Has to be released by the end of February, I think, for this company. Anyway, revenue up about 40 to 50% from 9.8 million to 13.4 million. This company is growing. Gross margins also increasing, up from 64% to 68%. Now, when we look at operational cash flow and profit, this company is still negative for both of these, but in terms of operating cash flow, they are closing in on becoming positive. Only operational cash flow negative by $600,000 in the last financial year. That was an improvement from financial year 20, but they were loss-making in financial year 21 by 3.5 million. Fair bit of cash on hand, $19 million of cash. I do believe they did a few, maybe 1 or 2 capital raisings during the year to raise that cash on hand. And we looked at the price to sales ratio, which is the only ratio, valuation ratio I use because they're not profitable, not operating cash flow, but they do have revenue. We get a number of 12.4, which is not too high, not too low. And if the share price remains like it is or where it is right now, that ratio should decrease because the revenue will climb over the next year, 2 years, 3 years, even longer. Just before I did this video, within the past week or so, Raiz did release the December 2021 metrics. That's on the right-hand side. On the left-hand side is from their half-yearly or yearly report that they did release about 4 months ago, which is looking at active customers and revenue per customer. So these are 2 metrics I want to see growing for Raiz over time. Active customers makes enough sense, and in fact, that almost doubled from financial year 20 to financial year 21, increasing 87% from 245,000 to 457,000. And just as important as the growth in active customers is the growth in revenue per customer. So you not only want to see the customer base growing, but revenue per those customers or existing customers to be growing as well. And that has grown or did grow at 32% from $47 per customer to $62 per customer. And the reason that's growing mainly is because of the fee structures. So on the right-hand side, we have their December 2021 metrics. On the top is the Australian metrics, and then on the bottom is the Southeast Asia metrics, looking at Indonesia and Malaysia. I have no idea right now if Raiz is anticipating moving into other markets within Southeast Asia. Maybe Indonesia and Malaysia is a first step of a growth trajectory into Southeast Asia, and potentially, just potentially, this is just my thoughts, around the rest of the world. Now, active customers in Australia from November to December actually did decrease very slightly from 291.7 thousand to 291.2 thousand. Customer sign-ups did increase. Now, even though active customers did decrease slightly, total funds under management did increase. very slightly, say $20,000 during the month. So not big increases when it comes to active customers and funds under management in Australia. Does that mean they've reached maturity in this country? Or maybe not. It could be just a little blip or 1 month blip. But when you look at Indonesia and Malaysia, we do see some good growth there. 7% growth in active customers in Indonesia and 7 or 6.6% growth in Malaysia. So they are growing at a good rate in both of those companies. That's 1 month growth. When we look at the 3 month growth, we see 27% growth in Indonesia and 19% growth in Malaysia. So it looks like Raiz is growing quite well in Southeast Asia, in Indonesia and Malaysia, but there is potential that the growth trajectory has or is slowing down in Australia. So it's good idea to keep an eye on whether this was just a 1 month blip in Australia or this is the beginning of sort of a slowing down in the growth in this country. Now into looking at Raiz's, not most recent quarter, but I just want to go back 1 year or 1 year and 3 months ago to see how they're performing in the September quarter financial year 20 and to compare their performance in that quarter to the most recent quarter, sort of comparing apples to apples, just getting rid of any seasonality in how a company performs. I don't think there will be any seasonality in Raiz, but some companies do have seasonality, and it's just best to compare apples to apples instead of apples to oranges. Hope that makes sense. Anyway, receipts for customers, Raiz in this quarter 1 year and 3 months ago, 2.7 million, and the company was not operational cash flow positive. They were negative for this quarter by 550,000. They did have $11.8 million of cash on hand and also spent $410,000 on intellectual property. So let's go forward 1 year to see how the company performed in the September quarter for financial year 21. As we move on to looking at their September quarter for financial year 22, this is the first quarter of the financial year. So if I did mention financial year 20 in the previous slide, that was wrong. The September quarter is the first quarter of the financial year. And we know that just by looking at the current quarter, and then next to the current quarter, we have year to date. So this is the first 3 months of the financial year, which is financial year 22. So if it didn't make the mistake in the last slide, I'm correcting it now. Anyway, in the past year, Raiz have increased the cash receipts by quite a bit, up to almost $5 million. But even though receipts from customers have grown quite considerably over the past year, costs have also grown at a pretty good rate over the past year. But the most important thing is they have not grown as quick as receipts, which means instead of being operational cash flow negative by $500,000, Raiz was operational cash flow positive by about $100,000. So they have potentially reached a very important inflection point, which is being operational cash flow positive. And the next step is to maintain being operational cash flow positive through the rest of the year and then becoming free cash flow positive. And the reason I say that is they did spend $540,000 in their intellectual property. They did receive about $600,000 in something about subsidiaries. But if you take that away, that $600,000, Raiz is not free cash flow positive just yet. They still are losing a little bit of cash when you take into account their operation activities and also their financing and investing activities. But that $600,000 in regards to something to do with a subsidiary meant the cash on hand actually did grow through the quarter and finished at $19.5 million. The next thing I always look at for companies that do release the Appendix 4C, or really any other company on the ASX, or actually any other company in the world, is just to see how receipts and revenue grow through time. I want to see these very important metrics growing, because if you can't grow receipts, can't grow revenue, how are you going to grow your profits and your operational cash flow and your free cash flow in the future? The only way you can do that if your revenue isn't growing is by cutting costs. And cutting costs is not a long-term thing you can do. The best way to grow profit and cash flow in the future is by growing receipts and increasing your margins, or even maintaining your margins at the current level. And for Raiz, we have seen their receipts grow through time. The first quarter they were listed on the ASX, they had $1.2 million receipts. That was the June quarter 2018. And they've grown it from $1.2 million to 4.9 million in the most recent quarter. So they've quadrupled their receipts on a quarterly basis over the past 3.5 years. And in fact, if you calculate the growth rate of receipts, you get 11.4% per quarter. That's a nice growth rate per quarter. A lot of people would be happy with that per year, but this is per quarter. So we have definite upwards trend in the receipts history for Raiz. Does the improving financial performance of Raiz, the very fact that they are now operational cash flow positive on a quarterly basis, translate to how the share price has been performing over the past 2 years? This is the daily chart from January 2020. And over the long term, the share price movements of a company will be largely driven by fundamentals or the financial performance. And we have seen that with Raiz if you go from the start point of this chart to the end point. If you go to January of 2020, share price was hovering around 85 cents or so, and now it's $1.71. So the share price has doubled over the past 2 years. But if you look at shorter increments in this chart, you can see the share price performance of Raiz be quite successful at times. For instance, from November 2020 to February 2021, the share price tripled from about 75 cents to a high of $2.20. But from that high of $2.20, for the majority of 2021, the share price has gone sideways. In fact, the share price from that high in February last year has actually fallen from $2.20 to a current share price of $1.71. The other thing I want to point out is one of the things I really look for with charts, and the 3 moving averages I've depicted on this chart which is the 25, the 50, and 100 day. One thing I'm looking for is a squeezing or tightening of the moving averages together. We actually saw that in October last year. You can see those 3 moving averages come together. And that's telling me there's a decreasing volatility in the share price. And you can definitely see that share price was not moving much on a day by day or even week by week time frame in September and October of last year. And then all of a sudden there was a breakout in this share price in November. So one of the things I'm looking for is a tightening or coming together of those moving averages, which is telling me decreasing volatility. And whenever you see decreasing volatility, that is telling you that sometime in the future there's going to be a breakout or potential breakout in the share price. And we saw that with Raiz in November last year, and then the share price tripled over a 3 to 4 month period. And right now we're starting to see the same sort of signal. Not identical signal, but the 3 moving averages are starting to come together again. So what I'm looking for in the future is a breakout in the share price to the upside, and hopefully the breakout in the share price will coincide with some positive financial news. And then maybe that will be the beginning of another short to medium term uptrend in Raiz's share price. That's all I have for this December 2021 update for Raiz. If you are an active customer of Raiz right now, I'd love to hear your opinion on their app. So leave it in the comment section of this video. If you want to ask any questions about this company or any other company on the ASX or even international companies, just leave your questions in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye. Back to the cricket I go.